Having looked at what an instant payment is, let's now define some of the concepts in the environment around instant payments. We'll start by defining instant payment services as the products and actual offerings that enable end users to participate in instant payments. The term end users refers to any individual, business, or government entity that utilizes instant payment services. PSPs, or payment service providers, refers to any entity that participates in the instant payment system. PSPs may include both banks and non-banks. What about a payment scheme? The Bank for International Settlements, or BIS, defines this as a set of procedures, rules, and technical standards that govern the execution of payment orders. One payment scheme may consist of one or more payment systems in which multiple PSPs participate. Furthermore, a scheme may be responsible for governing other aspects of instant payments, such as security around payments, processing of payments, or any other technical requirements. Let's look at what a payment system is. This is a set of instruments, for instance, bank cards or e-money, banking procedures, and typically interbank fund transfer systems, focusing on clearing and/or settlement of funds. This system ensures that funds are circulated. It must be noted here that central banks and other authorities are usually responsible for operating and overseeing payment systems. Even if the central bank is not directly involved in operating the payment system, it may play a role in settlement services. Let's now look at clearing and settlement, which were mentioned earlier in the definition of a payment system. Clearing, as defined by CPMI, or the Committee on Payments and Market Infrastructures, is the process of transmitting or sending a message containing the transaction details from the payer's PSP to the payee's PSP, reconciling to make accounts compatible, and occasionally confirming transaction instructions before settlement occurs. It may also include the netting of transaction instructions and the establishment of final positions for settlement. Settlement, as defined by the CPMI, is an act that discharges obligations in respect of funds or securities transfers between two or more parties. In other words, it is the movement of funds between parties. With instant payments, this can either involve deferred settlement or real-time settlement. When the transfer of funds between PSPs only occurs after funds have been credited to the payee's account, it is known as deferred settlement. This type of settlement relies on credit being extended by the payee's PSP, which does have some risks. With real-time settlement, the payer's PSP transfers the funds to the payee's PSP, who deposits the funds into the payee's account. These debits and credits between parties occur sequentially and at speed. Lastly, the term instant payment implementation or deployment refers to the use of payment schemes and payment systems so that PSPs can provide end users with instant payments. A simple payment implementation can be seen in a closed-loop system, where a PSP will only provide services to their own customers. This doesn't mean that the system can't support instant payments. Instead, instant payments are processed between two end users of the same PSP. In an open-loop system, there are multiple systems and schemes which operate together to provide payment services to their end users. Within an open-loop system, the payment system and payment schemes will outline the rules and procedures required to transact payments between PSPs. These are some of the concepts relating to instant payments that you will come across during the IIPS course. It's important that you understand these terms in order to have a solid foundation for the rest of the course.